Hello guys, welcome to my YouTube channel. And if it is your first time, don't forget to click that button for subscribe and put your comment on the comment section so that I can improve my channel. Okay guys, this one is today I want to teach you about how to trade the supply and the demand, how to market supply and the demand and to trade them. Okay, let me start. There are before entering your trade, always you have to look in the what the higher time frame is doing, what the kind of trend is on the higher time frame. You have to look at the daily time frame, weekly time frame, what the force or direction of the price is on the higher time frame. The direction of the price on the higher time frame has higher influence on the lowest time frame. Because let's say, take an example. You find on the highest time frame the trend is a downward trend. So on the lowest, when you switch your time frame to lowest time frame, you have to look for in order to look for the entry, you have to find an entry for sale when the trend on the highest time frame is a downward trend. But this also play on the sideways trend or on the upward trend. You have to look for buy on the upward trend, but on the sideways trend you have to look either for buy or for sell. So let me teach you how to trade supply and demand. So when you find when you look where your daily time frame, when you find that the price is either on the upward trend or downward trend, you have to switch your time frame on the lowest time frame to look for the nearest supply or demand zone for buy and the supply zone for sell. So we have some kind of this is the way that I use to trade supply and demand. There are basic two supply and demand that I use to trade for: rally, base rally, and the drop, base drop. Rally, base rally, and the drop, base drop. This one is a drop, base drop. When the price return to this base, you have to enter your order for sale. You can see at this area, this one is an area for sale, and this one here is a base. So this is how I trade supply and demand. Let me teach you mostly. For example here, how to market them, supply and demand. You can see this one is a supply area. You have to mark the week. Always I prefer to mark the week in case of the candlestick with a larger body. I have to mark the week. This one you have to mark the week, and your stop loss always will be just above the base. For example here, the force that originated the force that created the brick of market structure at this point here, originated from this point, this point here. So this one is a supply area. And when the price return to that supply area, you have to focus for sale. In case when your trend on the highest time frame is a downward trend, you can send the stop loss. Always put your stop loss just above the week that you mark it. For example, here you can put your stop loss here or here to minimize the risk of being stop hunted. Here you can put your stop loss. Again, you can see another supply area at this point. This one, drop, base drop, and when you put your line chart, you can see it clearly. Let me put a line chart to so that you can see. You can see this one is a base. This one is a base, drop, base, drop. So when the price returns to this base, you have to sell. This one you have to sell at this area. So you can see this one. This one is a base, and the price drop, then you return to the base and then sell it just a little bit. Even for scalping, you can use it for scalping. Even for scalping, you can use it. Just for scalping also you can use it. That's in case of supply areas. Let me find another. You can see also this one is a demand area, the rally, base rally. This one is a demand area. When you draw this, you have to mark also the weeks. Let me show you. So your stop loss will be just below the wick, just below the wick in case of a demand, and just above the wick in case of a supply area. And you can see the price was reacting very nicely up to this point here. From here up at this point, this one is a base, so you have to buy at this point, and the stop loss will be just below the wick. Let's see another examples so that you can understand it more. Let's see another example. You can see, guys, this one also is a base. This one is a base here, and the price reacted very nicely. Also, this one is a demand area. You can see this one is a demand area. This one is a drop, and then you make a base, then drop. When the price return to the base, you have to sell always. You have to sell in such a way that you can see up. You have to sell, and you always have to mark the base. I told you have to mark the base by marking this week. In case of a body with a larger candlestick, you can mark this week, and your stop loss always put your stop loss just above the base. You can see how the price reacting nicely. In case of a demand that or supply that have been made with a larger candlestick in like this one here, you have to mark always your supply and demand zone, because these are price area or destination area of price before going to push another move. These are destination of price. The price just stand in such distance a little bit, then move in the desired direction. You can see here the price come to react to this demand area. We have this demand area, but we have this demand area, and this one is also, this one is a supply area, not a demand area. All right, this one is a supply area, drop, and then this one is a base, then the price was drop. But this one here is a demand area. Because we make a rally, base rally, and when the price return to the base here, you have to focus on a buy. You have to focus on buy, and as you can see, the price reacted very well at this area. Come here and to react to this demand area, and then push a price up to the supply area, then was sell. You can see it very clearly. Just even a little bit, just even if you also can scalp, also for scalping, you have to use these. These are very, very profitable way also for scalping. You can see this one is a demand area, a rally. This one here, red candle is a base. Then price make another rally move, and also you can see here just a little bit the price was reactive by buying at that area. So this is very profitable way of trading supply and demand. You can see there are a lot of examples, guys. You can see and trade for this one also is a base made with multiple candles. Also this one is also a demand area. This one is a demand area, and when the price return to the base here, if this one is a base, you have to buy. And you can see the price push a lot of pips. And it is work only also for currencies, not only for synthetic indices. It also work on the currencies, not only on the synthetic indices. You can see, guys, price reacted very nice up to this point here, after reacting the nearest demand area. Also this one is a supply area, guys. You can see this one is a supply area. Let me draw it. So that you can see it clearly. This one, you have to mark the wick, and your stop loss will always be just above the wick in case of supply, and just below the wick in case of a demand area. And you can see how price reacting nicely, and your stop loss will be just above that kind of supply area. And you can see the price sell a lot of pips, guys. You can see it. lot of pips up to this point here, guys. Price sell massively up to this point here. Can see it from this point here. But you always, as I told you earlier, you have to look on the highest time frame. The highest time frame have a higher impact on the direction of a price on the lowest time frame. So you have to analyze it from the highest daily time frame. Then when you switch your time frame to lowest time frame in order to search for entry, on the lowest time frame help you to get an entry with a minimal risk. So on the lowest time frame, you have to find a supply area like this and a demand area like this. Also, you have to find a mitigation block that I'll teach later. Also, you have to find a breaker block or change of character. All of these will help you. Also, you can see here the price reacted to this area. Here, this one is a base, and the price reacted to this one and the buy up to this supply area here, and then sell. So it's a profitable way of trading, guys. Okay, this is a very, very powerful strategy of trading supply and demand. Very, very powerful. Also, this one is a demand area. This one is a demand area. This one is a demand. This one is a drop. And then this one is a base, and this one is a rally. So when the price returns to this base, you have to buy. You have to buy when the price returns to the base, and you can see market always market at this is stop loss at this week here, and the price always stop loss just below the week. To avoid the stop hunt, be careful to avoid the stop hunt. And you can see price reacted to this base here. If this one is a week and your stop loss will be just below the week, this one is a stop hunt always, and the price react. And your exit point will be when you buy at demand. Your exit point will be, or your first take a profit will be to the nearest supply area. For example, here the nearest supply area will be here, and this one also is a support, because this one was first was a resistance, and the price break it and make it a support, and the price become here to support here, and then it drop again. So this one is a nearest supply area, so we have to exit at that point. Okay, so guys, thanks for watching, and this is just a little bit how I trade a rally based rally and a drop based drop. So on the next video, I will explain you a better way or another way of trading supply and demand. There are a lot of things that I use to trade when using this concept of supply and demand. So guys, thanks for watching. Don't forget to put that button for click that button for subscribe, and put your comment on the comment section.